Good day everyone, Ali is here from Safi Financial Network. Today is June 5, 2022. Alright, still my voice is hoarse due to COVID, sorry about that, but we will move forward into this video. Alright, in this video I want to talk about yield curve inversion and the potential recession that everyone's talking. I talked already about this in months of March. You can refer to that video as well. But in this video it's going to be very short and sweet, and we're just looking at the history of the inversion and what is going on after that in the stock market. Alright, so here is the yield curve chart. This is US 10-year Treasury bond minus US 2-year Treasury bond weekly chart. And as you see here, I just pointed out some dates that chart is getting below zero. So whenever we are getting below zero, which is the red line here, this means yield curve is getting inverted or we are heading into recession. So this is kind of leading indicator. It doesn't mean that as soon as we get to that sub-zero level we are into recession, but it's kind of like giving us indicator that sometimes around 8 months to 2 years after this inversion happened, recession is most probable. Here is the 2000-2001, and as you see here in January 2000, yield curve for the first time, before that in June 98, so yield curve just touched sub-zero and then bounced back up, and it just stay above zero and then coming down below zero. So what happened to the S&P chart? Let me bring S&P 500 chart to this chart and we can have a better comparison. Okay, here is the S&P 500 chart, and as you see here, when we touched this level, we were at the peak for the market, so everyone just panicked at June 98, and this is a deep down correction, and everyone's saying, okay, recession is most probable. And if you see, here's the trend line. If you just draw this trend line here, you see, even in that correction, the trend line broken, and everyone's getting, okay, we are heading into bear market. And after just nice W pattern, market just skyrocket for another higher high. That's what I'm telling you guys every single time. Whenever we hit this zero line, it doesn't mean that we are dumping into recession right away. So market gives us time and also gives us everyone, and sometimes surprising everyone. Look at that. So it goes all the way up, kind of like a 20% more, even 30% more from this bottom to this high. And when there is another deeper yield curve inversion, then recession came up in 2000 and 2001. So when was the market peaked? Market peaked exactly here, August 2000. So when was the second time yield curve inverted? January 2000. So it gives 8 months from the second time, and also here 2 years, almost 2 years after the first one. So that's what I'm telling you. This is for 2000, 2001, and here is 2000. Okay, let's just adjust a little bit. Okay, here is year 2008, 09 or 07. Okay, so here is 2006. So you see yield curve inverted in 2006, February 2006. Market just topped out here. We had another correction, and this correction again was pretty similar, just because if you draw a line here, you see trend line almost touched and broken. But if you just zoom in, here is a nice W pattern. I can't zoom in just because it doesn't work out. Market just formed out a nice W pattern and then skyrocketing for another higher high. From here, this low to this high, it was almost 25 to 30% upsize for the S&P. So this is very, very important. You shouldn't be early into the short size, or you shouldn't be early into put option just because you think that we are heading into recession. Yes, we are heading into recession, but again, for the time perspective, here is a yield curve inverted first time in January 2006, market topped out here April 2006, correction came after that till July 2006, and then going all the way up here. So yield curve just mimicking, bouncing back up and mimicking below zero here, stay below zero here for a long time. And in October 2007, almost a year and a half after the first inversion happened, market topped out and collapsed afterwards. Okay, so that was for 2008, 2009, which was very, very important, which we call as a Great Recession. Here is another one, which is pretty interesting, and I think this is very, very important one, just because this is very, very recent one. First time yield curve just heading down. It was due to, if you remember, trade war between US and China. So President Trump on that time put lots of tariffs against China, and they just initiate trade war between US and China. Market just panicked and collapsed dramatically. It's about 20%, 21% drop for S&P 500. And if you remember Christmas time, market just forming the bottom and skyrocketing to the upside and form this V-shaped recovery. The yield curve didn't go down to zero, just because I want to stretch it a little bit. You see, yield curve didn't go to zero, but it was enough for market to just burst the bubble, or kind of like a regaining the energy on that time. And after that, market just skyrocketing to the upside till COVID crash. Okay, so before COVID crash happened, what happened to the yield curve? If you see here, I just want to point out August 2019, which is exactly here, right there. So August 2019, market was here almost pretty close to the all-time high. Yield curve for the first time inverted and just touched and bounced back up, and it didn't stay there, but market just have it like tipped down. That tick down was a small correction, but market going all the way up here, stretching to February 2020, which COVID crash happened. And I remember everyone's talking about the recession in that time, and they said probably in next 8 months to almost a year or a year and a half, we will have another recession. And everything was going higher and higher and higher, and no one paid attention. But when COVID came up, everyone's saying, okay, due to COVID, market collapsed. But yield curve told us exactly market is going to collapse. And the yield curve doesn't give us any reason. Yield curve just says, this I'm leading indicator. I'm telling you, in the next 8 months to 2 years, you will have a very, very massive, severe correction, or even recession or collapse or something like that. So in this case, we didn't have like a bear market or long last bear market. It just happened in 2 months, a flash crash. And this flash crash, to be honest, it's like a rubber band. It goes up, down, and then all the way back up here. This is a super cycle V-shaped recovery going back up here. And look at that. So here is another time. So yield curve topped here, market topped here, market going down, yield curve just hit the recession indicator. Here is March 2022. Okay, so in March, which is here, yield curve told us we will heading to the recession in the next 8 to 2 years. So market is already correcting, and I think this is going to be correction followed by a very, very nice rally to the upside. I'm not sure how much rally is going to stretch, but I think this rally is going to be a nice one, very, very epic one, and no one is expecting this one, just because the previous ones, I'm just giving you an analogy, the previous ones, when we hit the yield curve here going to the below zero or sub-zero, we are heading into recession in next 8 to 2 years, not now. And when we hit this line, market just have a correction and then coming back up with a nice rally. Market here, correction, and then coming back up with a nice rally. So this is going to be the case, I think. If you historically look at the chart, this is going to be the case. I'm not sure if this is happening 100%, but I think we will have an astonishing rally, at least from now until September or October. Then in September, October, or lately this year, we will have a bust, and we should be worried about that. But right now, this correction is kind of like regaining energy for the market. And in the next video, I'm just talking about a S&P 500 chart. I'm going to provide a weekly analysis. Make sure that have a look at that one as well. And we will see how stock market is forming the bottom right now for another rally to the upside. Okay, see you on the chart. If you like this video, please give us a like, smash the like button, subscribe to our channel, and share it with your network. Have a fantastic day. See you on the chart. Bye bye.